I really want to help you retire with confidence. And in 5 simple steps, I think that we can walk you through what that process of, the past 30 years of helping hundreds of retirees kind of transition from their working years into retirement time. Number one is what I want you to do is I want you to focus on the things that you can control on and don't dwell so much about things that you have little to no control over. As an example, you really can't control what happens with Social Security. There's this big debate in roughly 10 years from now that they're only going to be able to pay out 80% in benefits. And, during our show, we've talked a lot about my opinion of when might be the best approach to draw Social Security. But at the end of the day, what the Social Security Administration or the government does with the decision of Social Security benefits in the future is beyond your control. It's beyond your control what happens with taxes, right? I believe that the Trump administration wants to continue to make taxes favorable, quite frankly, as long as he's in office. But it still doesn't change the fact that if we look at usdebtclock.org, we're roughly $37 trillion of debt. So in the long run, tax rates might be a lot higher. But again, you and I, we don't control what the government does with taxes. On Medicare, we talk a lot about people's health insurance. There was changes that went into effect this year with the Inflation Reduction Act. Those changes impacted, on a positive, how much maximum out of pocket a retiree has to pay for prescription drugs. On the negative, there's been a lot of carriers that have just simply got out of offering that type of coverage and or maybe dropped different coverages that they have. So you can't control what the carriers do. You can't control what the government changes for Medicare. So what I want you to focus on, I want you to focus on the things that you can control in your individual situation. Number one is you can focus on how much money you choose to save. I believe that early on in life, the faster you start saving and investing, the easier it's going to be later in life. You can increase the contributions that you make. So if you got a pay raise this year of 4%, why don't you take half of that, take 2% of that increased pay raise and put that back into your retirement savings and then spend the 2% more in higher cost of living increases. You can pick and choose the type of savings vehicle and where to put your money at. Today, most 401ks have the flexibility to put money in, pre-tax and a pre-tax tax-deferred retirement account. A lot of the 401ks, they offer the ability to put money into a Roth 401k option. You could choose to save on your own outside of that into like a Roth IRA. You can choose if you have money saved up in taxable accounts, investing in things that pay dividends and interest and or, shifting to things that maybe are tax deferred or tax free. In my opinion, the goal is to try to shift as much money from taxable to tax deferred to tax free. And that is an area that you have control over, again, by where you make those deposits at, by where you put the money at, and building up the tax free money is a way to go. Here's what happened is society has taught you in many times to save and invest in tax deferred retirement accounts because when you retire, your tax rates will be lower. Again, over 30 years of helping people retire and hundreds of families move through retirement, those people who were successful with saving and investing, it's very common that their tax rates are not lower in retirement time because they're spending those retirement dollars. In addition to that, if we have a situation where tax rates go up in the future because of the massive amount of debt that we have, then you also have the issue of higher taxes on a bigger balance. So taxes may not be lower in the future. You can control when you do that. You can control when you retire. We've got a segment coming up talking about, is this the year for you to retire? But you have the ability to make a decision on when you want to retire, whether it's this year or next year. You have a decision that you can make on when you want to claim Social Security. How do you want to invest? What type of investment vehicle do you want to put those money into? Number two, what I want you to do is I want you to use technology to create a written plan. And when it comes to using the technology that's out there, I think for retirement and financial planning, this is an area that we've seen dramatic improvements over the years. Similar to the fact that we've seen a dramatic improvement in like the healthcare field. Financial planning in the past, I would maybe have to go get the local newspaper. I'd have to read through a couple hundred-page book prospectus to figure out returns, cost, fees, and expenses. With technology today, I have the ability where I can quickly get information to be able to help somebody create a written retirement plan. And you want to use that technology to get everything kind of organized and to see if you're on track based upon where your unique goals are. I Googled, free retirement plan, and there's different free retirement plan software that you can have. Any plan is better than no plan. We use and build out for our clients some software that we have with Right Capital. And if you need a link to that or need help with that, just reach out to our office. But use that technology to create that written plan. Number 3, what I want you to do is I want you to then stress test your plan. In stress testing your plan, the goal is to try to identify a 90% or higher level of success for you being able to reach your goals. So you're going to go into the software. In the software, you're going to put, what your age is, how much you're making at work, how much money you're saving in a 401k, what the company matches. If you're saving in an outside vehicle, what that looks like. You're going to put information about when do you want to retire, what is the income that you want to have in retirement time. Any of those goals that you have, you're going to then either type in the information about what your current net worth or your savings is. You can also, in a lot of the software today, you can aggregate that, meaning it can automatically feed in to speed up the process of keeping it up to date. And then from there, again, when you hit the go button, you want to find 90% level of confidence. With number 4, what you want to do is you then want to eliminate and or address any key risk elements that you see within the plan. And what do I mean by that? Well, what if inflation is higher than expected? Stress test the overall impact of what is the risk that inflation has. If I go back 5 years ago and I was talking with retirees, I would say 5 years ago, inflation really wasn't an issue. We were just going into COVID for retirees. Inflation wasn't major an issue, but it is today. And then if inflation gets higher in the future because of tariffs or spending or whatever the case happens to be, how is that going to impact the success of your plan? You want to look at taxes. What if tax rates do go up in your situation by 20%? You want to look at longevity. If the plan is that you looked at longevity to age 85, what happens to you or your wife, or if you both live to age 95? Healthcare can be a big one to take a look at. In looking at healthcare, what I will normally do is I will normally take long-term care out of the equation in running the initial analysis. Again, what I want to do is I want to get to that 90% confidence of success. And usually if we put in the scenario of somebody needing long-term care, aka a nursing home, whether it's assisted living or a full-fledged facility, that can derail a plan. Not to say that you don't want to look at long-term care. I think that's an important aspect of developing your plan, but don't have them there as the primary context. You want to look at a market crash. What happens to your plan if the market crashes tomorrow? What happens if the market crashes, let's say, the first year that you retire? Doing this allows you to identify those areas and the impact of what happens. Once you know the impact, then it allows you to look at financial products and make decisions and how to build out your portfolio based upon ways to reduce and or eliminate those key risks that you identify in your written retirement income plan. And number 5, if this is kind of all new to you, I get it. Work with a professional, work with somebody who understands the ins and outs of helping you create a written retirement income plan. And if you take all of those steps, I think what you're going to end up with is you're going to end up with a situation that allows you to find that retirement confidence that you're looking for.
Again, if you have, you don't think that you're going to be able to do this on your own, or you need assistance with doing that, not a problem at all. Nolan and the team at America's Retirement Headquarters, Nolan alone, 30 years of helping people gained that retirement confidence, combined, decades of experience with the entire team at America's Retirement Headquarters. So if you need assistance with this, it's as easy as reaching out, giving a call, setting up a time. 419-794-3030 is the phone number. Or you can go online to the website, find out more about Nolan, the team, set up a time there as well. That website is arhq.com.